Hi, my name's Bill Mason from Mason & Mason. I'm a real estate attorney in New York, and I've concentrated my practice on transactional real estate for about the last 25 years. And today I want to talk to you about ways to save money on the closing costs when you buy or refinance a house in New York. So anybody that's gone through this before knows that the closing costs are basically insane. There are a couple of ways you can reduce them, and some of the ways are really not really taken advantage of that much. And so that's why I wanted to make this video and give you guys some ideas. The first thing you see is that the biggest closing cost is generally the mortgage tax and the transfer tax, especially if you're dealing with a property that's in the city of New York. There's a way to either avoid paying that tax or substantially reduce it. So what you can do is, if it's a refinance or a purchase transaction, is you can go to the existing lender that has a mortgage on a property, and you could look at their statement and see how much existing principal is left on the loan, okay? So that amount of the existing principal is key, because that shows the amount of mortgage tax that you can assign to a new lender. So like I had said, I think at the beginning, is the tax is calculated, or if I didn't say it, is calculated on a percentage of the loan amount. And what happens is you get the existing lender to assign the mortgage tax to the new lender, and then you only pay mortgage tax on the difference between what was assigned and what's called the new money, the amount above what's assigned. So just for a simple example, if you had a loan with $75,000 existing principal from the existing lender, and you were taking out a loan for $75,000 to buy or refinance a property, you would have no mortgage tax. If you were taking out a loan for $100,000, you would just pay the mortgage tax on the difference, the $25,000, which is referred to as the new money. So that could be like a real windfall. Okay, so that's the first thing, saving mortgage tax. This is also sometimes commonly referred to as a SEMA, or assignment of mortgage. So it's really something you should look into. You could easily save tens of thousands of dollars. It's a big chunk of your closing costs, whether it's a refi or a purchase. So the second thing that I wanted to talk to you about is what's called the continuing lien deduction. And so the state and in some instances the counties, they also want to charge a tax based on the sales price. It's called the transfer tax, and this is calculated based off of the purchase price. So in Long Island, the transfer tax is $4 per thousand of consideration, and so on $100,000 you would pay $400, right? So that's nothing for sale for that price in Long Island. But when you get into the city of New York and any of the outlying boroughs, and just it varies by county throughout the state, they have their own taxes, and you can have another substantial county tax on top of it. So that number could really add up, especially when you're dealing with a Manhattan or a Brooklyn property where they're almost always over $1 million. And so the way this works is, if you have a purchase and you do what's called the purchase SEMA, like we had started talking about at the beginning of the video, the amount of the existing mortgage that's assigned to the new lender, right? Let's say we use that same example, it's $75,000, right? That's called continuing lien deduction. And so if the purchase price is $100,000, and you've got this $75,000 of continuing lien deduction, you're going to only pay on the additional money. So that has a double savings, saves the transfer tax for the seller, it saves the mortgage tax for the buyer, and it's something you should really look into, but it's the kind of thing you need to talk to your loan officer about. There is a little bit more work involved, and not everybody does it. So the next thing that I would tell you to think about is, when you refinance a property, you want to make sure that the title insurance premium you're charged is the correct premium. So on a refinance, there's what's called the reissue rate or the short rate, and you're entitled to like a discounted premium when you refinance within 10 years of the purchase or the last insurance is taken out. Not all the companies do that, even though they're supposed to, so it's just a good idea to check that. And even on a purchase, make sure that they calculated the rate correctly. Title insurance is really regulated. There's a rate chart. I think just about all the underwriters, you can go online and go on their website and actually even calculate it for yourself. Title insurance is another one of the big expenses, and you want to make sure that you're not overcharged for it and you have the right amount. And then another thing that I think you should think about is when you buy a house or you refinance, you really should know all about the mortgage. What's the rate? What are the fees? Is there an application fee? Is there a processing fee? Are there points, which is like a way of saying an origination fee or a discount fee? Those are 1% of the loan amount for each point you pay. So these fees add up, and really understanding what the costs are associated with the loan and what the rate is important up front. I think that, like anything else, if you go out and buy a car and you shop around for a price, it's the same thing, except on a much bigger scale. And you really want to know about that because you don't want to get a surprise at the closing when it's too late to change mortgage companies and find out there was an extra $2,000 or $3,000 in closing costs, or, your rate wasn't locked in, so it's a higher rate. So take that time to go over everything with your loan officer so you really understand it and you know what the fees are and that you're happy with them. Shop around, okay? So make sure you're getting the best deal. Speak to your attorney about any questions you're not sure about. The time to ask is at the beginning when you first start with the bank as opposed to the end, and you're kind of too far along to make a shift. And with that said, I also think it's a good idea to work on the insurance at the beginning. I see most people on a purchase, they work on the insurance the week before the closing. And first of all, not all the policies are the same. You probably want to get a replacement cost policy. You want to talk about the liability limits, right, for third-party liability. And I think you just want to have enough time to do the same thing, go over the policy, what's covered, and what's the cost, and feel comfortable with it so you're not getting the best price possible and not really getting the best coverage. So these are the types of things that I would think about when I was going to buy something, or things I would think about if I refinanced a property. So just to recap, I think about if I can save mortgage tax with a SEMA. I think about continuing lien deduction if it's a sale. I think about the title insurance to make sure I'm just properly paying the fees. A lot of those fees are statutory and they're easy to check. And whenever I get a loan, I really want to understand the whole loan, make sure I understand what I'm paying, what the rate is, and everything up front, so there's no surprises in the end. And I usually really spend some time looking into the insurance for the coverages and the prices. So these are the things that you can simply do. The mortgage tax is a gigantic one. Try to save yourself some money on some closing costs. I hope you enjoyed the video. If you have any ideas for anything else I could do a video on, I would love to hear from you. You can comment below, and I really appreciate your time. Thank you very much.